wait. You've been trading for a while now. 2 years has gone by, 3 years has gone by, and you take losses back to back. And sometimes you feel probably it is just random. Maybe the market is just against you. Maybe it is bad luck. But it is none of those things. You see, I was in your shoes some few years ago, and all through my journey, I took losses. Guys. And at some point, I gave up. And at the other end, I thought to myself, then I came back to the forex market. But after I came back, I got to understand something. There is a game being played here, and only the few percent, probably 1%, only those guys understand this game, and it is called liquidity. And if you don't understand liquidity, then best believe you are the liquidity. And I'm really sorry, it's just the truth. I need you to understand this right now. Right now, in case you don't know me, my name is FX, a forex trader, and I've been doing this for almost half a decade, right? And I talk about my losses a lot. It is something I'm proud of because those losses are what made me become a better trader. And if you're going through losses right now, it's just that prerequisite, that step you need to move forward to do better. And it's nothing bad. It's just a shift in your position from being bad to being better a trader. Now let's start afresh. You're asking me what liquidity really means. Before moving into liquidity, let's talk about why price move the way they do. You see, in the forex market, a lot of people have come into the forex market giving different conceptions about things and all that. But here is one thing I want you to know. In this video, I'll be sharing some pro tips you would never have gotten anywhere else except in this channel. Trust me. And it's important you pay attention so that you can get the best of everything I'll be saying here. Now, these pro tips are not part of the script. It is not. It's just something that is gotten out of years of experience. So you want to pay attention. So let's go. Why do price move? Now, price does not move because there is structure. So some of you guys who trade the market structure, I trade market structure. In fact, I've made a video on market structure. In case you haven't seen that video, the video will be posted next on the right side of this this video you're seeing. So price is not moved by structure. You may have seen the break of market structure, the BMS, the CHOCH. None of those things move price. Now you may be scared and confused. It is true. One thing those ones tell you is the fact that they show you a trend. They tell you, okay, price is willing and ready to continue in a particular trend. So a BMS in an upside tells you, okay, price is continuing in its buying scenario. And a BMS in the downtrend tells you, okay, price is ready to continue to sell. Now that is all there is about structure. Structure does not tell you why price move. Now other people come into the forex market, they believe that patterns. Some of you guys who trade the double bottom, the double top, the triple bottom, the triple top. None of this move price. Now, if you haven't heard this before, it's important to pay attention. None of these things move price. They don't. The triple bottom you're talking about right now, the double bottom, those guys, they only help you see or spot out the possible reversal for price. So say for instance, price is giving you a higher high and higher low, and in an up direction. At some point in time, you saw price giving you a double bottom, a double top in a particular area. That is a strong reversal pattern. Now you could be like, okay, let's start positioning ourselves for a sell. All right, that is one thing about patterns. Now other people believe the momentum gives you what they call, gives you price movement. It is wrong, very much wrong, right? It is wrong. Now, after seeing all of this, I know you're kind of thinking, what then moves price? What makes price move and all that? Calm down. You see, here is where we enter the topic of the day, liquidity. You're asking, what then is liquidity? Liquidity means cash. I don't care whatever you've heard anywhere. I don't care what you've seen or whatever. Liquidity simply means cash. Now, let me explain. Whenever you click the buy button or the sell button in the forex market, you introduce cash. Whenever you set up a pending order, probably in form of a buy stop or sell stop, you introduce cash. Now I know you must have been told that liquidity only happens when there are buy stop or sell stop. No, you see, any buy at all or sell at all you click on the forex market, that is liquidity. That is liquidity. But the only thing you want to avoid is being liquidated. Nobody wants to be liquidated in the forex market, and here's where your knowledge of liquidity comes into play. Right, that is what liquidity is all about. Now the question there is, how then is liquidity formed? How is it played? Let me break it down. In a given day, trader A came into the forex market. He wants to trade. He's trading with a risk appetite of, let's say, $2,000. $10,000, $100,000. Nobody gives a shit. Nobody cares. These are minimum amounts in the forex market. Meanwhile, trader B comes into the forex market. The guy is called an investor. He's called the smart money, right? That guy comes into the market, and once comes into the market, the first thing he wants to do is to start buying. But he doesn't just buy it at that. He goes to where price gives him a kind of trick for other people. So let me put this in a clear way. In a given day, the buyer wants to buy the smart money. He's got probably $1 billion he wants to put in the market for that day. The one thing he does is that he puts probably $250 million, let's say 250 million, right? He puts it in the market, and price gives you a quick spike, and you are happy. You go call your friends, yo, price is ready to move, let's buy. You go call your other friends, those ones call their friends too. They come into the forex market, they put in orders. And here's one thing: for price to actually buy, there must be somebody willing to sell. So one thing the smart money did is they introduced a buying scenario to you guys, and you quickly bought. But meanwhile, the original intent was to sell the market. And this is why when price gives you that spike, you quickly good to go, you buy. Price eventually reverses to continue in its original direction. Now, why do they do this? You see, I believe that no individual has the power to move price. Now, you may have heard this before. Probably you're hearing this now. No single individual has the power to move price. Even Elon Musk has no power to move the price by himself for a long period of time. The only people who have the power to move the price in a particular direction are the government. The government. Those are the guys who have the power to move price, right? Now, since they can't move the price over a long period of time, the only thing they do then is to manipulate it in a short period, probably the 5 minutes, 2 minutes. And that is why most of you guys who trade the lower time frames, you are suffering. You're going through a lot, guys. You're going through a lot. So you should just desist from trading the lower time frame. They go into the lower time frame, kick on a particular trade, and then price spikes. Like you already know, it is full of noise. You quickly go and call your guys. That is why you lose money. That is why you lose money. It's just a case of catching a rat. Whenever you want to catch a rat, the first thing you could do is to just go get a trap. Put cheese on the trap. Now, the rat will naturally go after that cheese, but the cheese isn't the idea. The cheese is just there to get the rat, and so is the same idea smart money used to get you guys. So once you understand this, it becomes different the way you trade. I hope this is clear. Right now, that is it. That is the operation to liquidity. The next question you'll ask me right now is, where is liquidity found? Right, where is liquidity found? Now let me explain to you guys. Now let's move into that one, into the chat. Okay, so we're on the chat right now, and the question is, where are liquidity found? Liquidity are not found under your chairs or under your carpet, under the rug, probably inside the room, under the toilet. All those ridiculous places you could talk about. Right, liquidity are found on those areas that are very obvious, areas you least expected. Right now, one of such areas are your double bottom. Now let me draw a chart schematic. Right, see, for example, price give you a movement such as this, like this, like this. Right now, looking at this, this is gotten from a movement where price gives you let's see, price has been giving you a high and a low, a high, right? Then price eventually came down and give you a double bottom around this area, this zone right here, and you're good to go. You just want to quickly trade. You're happy. You go get your buying tool. You click on a long position, and then you want to buy. That's really nice. You take the trade well. You want to buy, right? And you're like, cool, this is like 1 point stuff something, 1 point something risk to reward, and you're good, you want to buy. But later on, your price did this, fell back down before continuing going up. And sometimes it may not even really fall back down before continuing going up. It may just continue selling. However, you already took a loss. You already took a loss. Now, why did this happen? This happened because you were trading on a lower time frame. Remember, I told you guys those trading on lower time frame, they go through a lot, they suffer a lot. Now, with your little scope of idea of knowledge of what you're seeing and the price gives you, you believe this is a buying scenario. You want to buy and it is cool, a nice setup. But then you get liquidated. So it's two scenario. Price may just fall down, clear your liquidity before going up. And some other times, price may just do this up movement and still fall, right? So here's the idea. Price, the liquidity started from this area, the obvious area where you wanted to buy from, which is your double top. I mean your double bottom. Don't mind me. Now, this same example is true for the selling, for the buying liquidity. So say for instance, price gives you a series of lower low, lower high, lower low, right? And at this point, price came back here, give you a double bottom, a double top, right? So you want to buy, right? And you bought, right? But from this area, let me mark it out. This area right here. What did price do next? Price eventually sold. Price eventually went back up, right? And you're like, what happened? What's going on? And price continued. That is liquidity. And just like I've said with this guy, you are trading from the lower time frame. So one way to avoid mistakes like this is to stop trading the lower time frame, right? The next area where I believe stuff like this happens are key areas such as your support area and resistance area. Let me pull this. Support area, resistance area. So this is resistance. We draw a chart schema right here, right? Price moved from support to resistance, fell back down, did the same thing again, fell back down, and to you're happy, you're building confidence, you're seeing, oh, you understand what price does. Price buys from every support. But you're only the only one who saw that. Smart money also saw that too. And it's about liquidity. Remember, I told you guys, for somebody to buy, there will be someone somewhere else selling. And that is why liquidity is in play in the forex market. So the smart money already knows you would try to buy from that area. So one thing they do is they may put a little order here, right? And you're happy. Then before selling short, right? And price continues selling short, right? And to some of you guys already took a trade right here, put your stop loss. Let's put what's it called? Let's put buying to right here. You already bought, right? Let's make this a bit smaller. You already bought, and imagine price eventually sold down, melted down. This is the same thing traders go through every day because they do not understand liquidity, right? They do not understand liquidity. So price liquidity can be found in obvious areas such as your double bottom, your double top, your key levels, probably your support and resistance. And some of you guys who also trade the breakout strategy, liquidity is also not far from you, right? This is not far from you, right? You want to pay attention and desist from all of that. Now, after doing all of this, the next question you're going to be asking me then is, how then can we spot liquidity? Now, if you've been following me throughout this video, you understand that spotting liquidity is almost the same thing as what I've just taught right here now, right? So one way to spot liquidity is to look for obvious areas. Number one, look for obvious areas where everybody is likely to buy or sell from. So areas such as this, right? Areas such as this are your obvious areas. The next thing you want to do is to wait for liquidity to get taken out. By the way, I'm giving you a kind of expo for the next question. And then the last one, I almost forgot this. Liquidity also can be found in the previous day highs and previous day low. Now, I need you to pay attention to this. In a given day, price gives you a series of higher highs, higher lows, higher highs, higher lows, higher highs, and price closed like this. Let me push this away a little. Right, price closed like this. The next day, another candle wants to open, and the candle opens this way. I need you to pay attention. Open this with what we call consolidation, or some of you guys will call it an Asian range, right? Goes in the opposite direction before selling. Now this kind of look like a Batman mask or stuff like that, but I want you to observe this. Let me make this a bit big. Price eventually cleared this high, the previous day high, right? The previous day high. Now this isn't about the previous day high alone. Even right here, since price ended closed around here, right, and new price open, the liquidity around these zones right here, it is called the Asian zone. Let me draw a chart schematic within here. It's called the Asian range. I mean, liquidity around there got cleared by this guy right here, and since it got cleared, price sold short, right? So in a given day, you want to mark out the previous day high and the previous day low at the end of the day for the previous day. This does not sound confusing enough. I hope you're not confused. You just want to mark the previous day high and the previous day low. Now once you mark that, you're good to go. You can start anticipating for liquidity to be liquidated before you start. Now the next question you want to ask me then is, how then do we trade liquidity? Well, let me put this in a clear way, right? So the very first thing you want to do to trade liquidity the right way, the right way is to first identify the trend. The trend is very much important, and the only way you can do that is to go down to your higher time frame, right? Where is the trend going to? Like for me, I'm on the 1 hour time frame right now, and let's say I'm using this time frame for finding my trend. I want to first find out my trend. Okay, cool, my trend, good. My trend is selling short. I want to sell short. The next question is, where are obvious areas liquidity can be found, right? You can see right here that price gives us a series of highs and lows right here. It's like a range over this zone right here. Let me show you this. It's like a range. Now to those who trade the lower time frame, they may see that as one beautiful area they should buy from. Let me just zoom that a bit, right? See that as a beautiful area. Now look at price gives us a series of highs and lows, and the next thing anybody want to do who trades stuff like that, they just want to put a pending order around here. Let me pull this out. Put a short order right here, and they want to sell, and it is cool. It looks nice. And it is something anybody will want to do until price does this, until price eventually went back up, clear that stop loss right before time came down. So the very first thing you want to do is, number one, understand your trend. Number two, mark out key areas where it feels too obvious to take a trade from. Number three, wait for price to liquidate that area. Number four, you're good to go. Now, I wouldn't tell you to use a particular entry model. Whatever entry model you want to use is actually cool. You could go on and use the entry model that best suits you. However, you should follow these rules. Let me reiterate so you get a better understanding of what I'm trying to say all through in the video. Number one, find out the trend. Number two, spot out obvious areas. Number three, wait for those areas to be cleared. Wait for those obvious areas to be cleared, and wait for liquidity to be cleared also. Number four, take your trade using whatever entry strategy you want at all. Right, so that's it. Okay guys, I trust this video has helped you in one way or the other. Remember, we just want to share knowledge, and I trust you picked one of two things. I mean, I've been sharing the pro tips with you guys. It's something I just want to do. I hope you learned from it, and we want to hear from you guys. We just want to see you grow. We want to know what you think about the video. We also want to know what you want us to talk about in our next video, and the question you may have concerning this video. So because we care about you, trust me, I do, because I was actually helped. People helped me to trade better. So that's it guys. I want you to share this video. If you haven't shared, share this video, like the video, and subscribe, because it helps the algorithm moves content like this, beautiful stuff like this, to people who want to see stuff like this, so they can become better too. I mean, share to your friends, your loved ones, and every other person you know at all. All right, my name remains FX, and I just want to help you trade better. See you in the next one. Bye for now. Cheers.